Task 5. So task 5 is about control accounts, reconciliations, and using journals to correct accounts. So what this is then is Principles of Bookkeeping Controls unit. We've got some reconciliations of ledgers. I think we're probably going to see some control accounts, maybe suspense accounts. Let's see what happens. So number 1 here we got alright, so space, etc. As well as posters. Here's its trade receivables ledger here. So this is the backing ledger showing all the accounts. And so I'm probably going to reconcile that to a control account. So if the receivables ledger and control account, receivables ledger control account, so there's the receivables, trade receivables control account in the general ledger, and the receivables ledger, the sales ledger, reconcile. What would be the debit balance? So the debit balance, we don't have any amounts owed from these customers, so we're not like the normal ones where we're in Principles of Bookkeeping Controls where they put a credit balance somewhere along the lines here, and the amount that's going to be the balance is going to be the total amount here. So that would have been posted to sales, that's posted to the VAT control account, and this would have been into the trade receivables control account. So let's create it then. 480.87 9786.34 7789.67 7439.24 2956.78 and 973.45. Now in the exam, what you would do is you would add up all 3 columns and then check them against one another. Okay, so that's what you would do in real life or in the exam. Let me just as well format that so that it's to 2 decimal places, isn't it? Anyway, there's 2 here, so that's what we are. 41426.35 in the exam. I mean, that is the right answer. In the exam, check you would total the VAT and you would total the net, and you add those 2 together and just check that was the right answer, because clearly you can make a mistake here, and that's just exam technique. Right, the balance on the receivables ledger control account. Yeah, so this is the sales ledger, or the receivables ledger, whatever you want to call it. And the balance on the control account in the general ledger is 40,585.5.70. So the difference is 840 and 65 pence. Okay, so that's our difference for that answer there. So we know we got a difference, so we got an error, because they should always reconcile. Identify whether or not the following statements. So what you're doing in this one is you go, what's the impact of whatever the journal is on the sales ledger. You then reverse it, and so the balance is reversed. And you see if it's the same once you reversed it. So let's have a see what we've got here. So in the first one we got a customer who's in credit having overpaid on a previous bill has not been included in the list of customers. Alright, okay, so and what we do is we put an amount in there. So a customer is in credit having overpaid in the previous bill has not been included in the list of customers. So that would be a credit on there. So credit in there. So the impact is that we've avoided we've basically got higher debit. So the impact is we've got higher debit in there. And if you want to sort of so you just sort of create an amount really. You start off with the figure, and then you take that off it. So we're going to reverse this, minus that, and that gets us the figure. So that could be the answer. So that would be may explain the difference. And then a discount allowed was recorded on the debit side of the customer's account in the receiver's ledger. So start with what the balance is. What happened? Well, we recorded a discount allowed, which should be a credit sort of side, which should be a credit element of it. We recorded it on the debit side. So the impact of that was to debit an amount, twice the amount, actually. On the credit, divided by 2, and we're going to reverse that twice. Actually, no, the impact would be just that, isn't it? So we've got a debit rather than credit, essentially. So we're going to reverse that, take it out, reverse it, and it's the same figure. So that's how you do it. You put in what the the trade, the sales ledger balance is. You put the impact of what's been decided in this thing here. So instead of going debit, we went credit. So we have debited essentially, and then you reverse it. So instead we now credit it. When it was debit, we now credit it. And does it now equal the same balance? In here, this is a question where they've not given figures, so I tend to put figures in there just so that I can sort of see what happens. Sometimes you might have, and I think in the practice for the Principles of Bookkeeping Controls, I sort of set questions where I give like the same reason but different balances to see whether you're sort of picking up on the fact that there's a credit balance within the sales ledger, or alternatively just to see whether instead you like use the Osborne attempt where you just sort of memorizing the whole list of reasons rather than actually sort of working out the calculations, which the examiner will resort to in the end. Yeah, so that's how you do it, and make sure that you come up with a number and reverse it. Right. Okay. So cash book at the end of June shows a debit balance of 833211, and the following differences have been entered. Right, we mentioned cash book, and we mentioned balance statement, which means we're going to be into a bank reconciliation. We've got the four-step method in here. Right, so we got the bank statements including some direct debits. All right, so basically that's step 3, where we're sort of adjusting the cash book here, and then the cash book here. That's got when you've got things in the cash book that aren't in the bank statement, those go into the bank reconciliation. Okay, right. So we're going to create an adjusted cash book. So we've got our balance before corrections, debit and our credit. And so we're starting off with debit 8332.18, our unadjusted cash book. And we're going to go through what we got here. So the bank statement includes some direct debits that are not included within the cash book. So a direct debit is a payment out. They are so credit 187.12 and credit 67. Okay, and the cash book includes a check that is issued to suppliers, so that's an unpresented check that will be in the bank reconciliation. And the bank has charged £12 worth of bank charges. Okay, so £12 worth of bank charges going in as well. And the cash book includes a customer receipt, so an outstanding lodgement of £102, so that's going to go in the bank reconciliation. So our balance then is going to be, do our T accounts. That's our carry forward balance, 8066, and let me just put those. And then the reason why you do T accounts like that, it's annoying. When you do your T accounts like this, is that you then re-add it together. Okay, let's put this all back to our 2 decimal places. There we go. Right, so that's the balance. 8066 and 6 pence. Now you see here where I set up a T account, I did a slight tweak in the carried forward things, and that's almost like how you would do it in real life, old school, where you just sort of try to make sure your addition's absolutely perfect, because an error was a bit of a disaster really. And so that's how I used to do it, to make sure when I did it in real life 30 years ago, to get it bang on. So that's our balance. And what you can see here is we had a set of things that were adjusted the cash book, and then other things that were going into bank reconciliation. Are we going to see a bank reconciliation down here in there? No, they just left us the items. And so that was a nice little trick there by the examiner. Really, it was going to sort of hang you out and see whether would you adjust for all the things, even though these are in the bank statement. Sorry, these things in the cash book are just simply things that haven't hit the bank statement yet, and wouldn't be already in the cash book. So well done, examiner. It's exciting. Right, a new computer was purchased for long-term use in the business. It's been debited to repairs and maintenance. So it's an error of principle. But let me just explain how you find an error of principle. You have assets equals liabilities and plus capital. Counting equation. not assets minus liabilities equals capital. That's a statement of financial position, and is wrong. And the reason why that's the right account equation was it makes a nice T account. So now, how do you know whether this is an error of principle or not, really? So what should have happened is we should have put it into here. So we should have gone debit here, debit asset. And we didn't debit asset, we debited the capital account instead. Right, which was a shareholder capital in there, and repairs and maintenance is a profit and loss account in the year that hasn't quite been shuffled off to shareholders' funds, but essentially it's shareholders' funds. These are expenses and income of shareholders' funds accounts. So we put it in that one. We put it in that one. We should have put it in that one. We broke and we went across these assets, liabilities, and capital here. If we were in the same thing, so instead of going it into the computer, we put it into vans. We were still in the assets, and so it wouldn't have been a fundamental breach of accounting approach. It wouldn't have been an error. It would have been an error of commission rather than an error of principle. But this one is an error of principle because we've gone and broken across it, and that's the easy way to find whether it's an error of principle. If it's not an error of principle, it's an error of commission where we're simply posting to the wrong account. Okay, in terms of the other ones, error of mission is missing from the accounts. Error of commission, not an error of principle, where we're posting to the wrong account. A compensating error would be where we've got two journals that whose debits and credits don't add up, but combined the debits and credits tally are the same. Really. Identify the impact on the suspense account for correcting this error. So an error of principle, we went debit asset, credit bank, let's say, and we went debit expense, credit bank. And we should have gone debit asset credit bank. There's no effect at all on the balance sheet here because our journal is still balanced, and none of those errors create a difference in the trial balance. So that's the question and is that it for that? And that is that for this question.